All right, everybody. Today is, let's see, Tuesday, April 20th, and I'd like to welcome our guest. This is our first Zoom interview, and I'm bringing in my trusted mortgage partner, Chris Binney with Empire Mortgage. Chris, thanks for joining us today. Appreciate your time.
Absolutely. Thanks, Mark.
Yeah, so today, listen, I have a lot of clients that are calling me, and I'm calling a lot of my clients as well just to see how they're doing, but the common question that comes up is, what's going on with the housing market? And obviously I can tell them a lot about the inventory that we're seeing, the activity we're seeing with our buyers. But more importantly, from my perspective, really is what's going on with the mortgage industry, because that's really driving our buyers' ability to make a move, whether that's a mandatory move, they're relocating for work, or somebody who's looking to just make a lifestyle change. So tell us a little bit first about yourself and your mortgage company, and then we'll dive into the nitty gritty.
Sure. So Empire is both a mortgage banker and a broker. So we have products available pretty much in the range at the very bottom to your first-time home buyers, all the way up to your luxury jumbo loans that you can do. I've been in the mortgage industry since 1997, so a lot of experience doing this. I've seen ups and downs in the market, not necessarily like what we're going through now, but we've seen financial crashes from 10 years ago. We've seen rates in the sevens. So we've gotten to see a lot, and we learned a lot. And going forward, we partner ourselves and our company with what we think is the right banks and companies that will really keep rates pretty stable, and still be able to offer the products that we need going through all of this.
Okay, great. And so, obviously there's been a lot of changes over the last few weeks. You and I talk every day, so I get how crazy your hours are right now just to keep up with your existing escrows. And then again, you're getting a lot of refi business as well right now. How would you categorize your current business flow? Is it 50-50 cash refis, or is it, more buyers versus refis? What are you seeing?
Honestly, it's pretty 50-50, both purchases and refis. Refis are wonderful, but they have the same ups and downs as purchases right now, right? A lot of people are laid off from work or furloughed, or what does that mean? To some people are getting paid, but their place of business isn't open. So I'd say about 50-50 right now. Refis, purchases, it's a good time because rates are down, and honestly, they're not going to move for quite some time.
Okay. And now, obviously somebody that's in a position, you mentioned with the layoffs right now, people are being offered the forbearance option if they can't make their mortgage payments. Let's talk real quickly about that, because I feel like this is the topic that may come back to bite some people in 6 or 12 months that didn't maybe necessarily understand the forbearance program and how that works. Tell us what your thoughts are on that.
You got to be extremely clear with your mortgage servicer that you have now. And I can't tell you any more than to continue asking question after question, because you have to understand what the forbearance means. Some companies out there, sure, they are taking 3 months of your payment and dropping it to the very back end of a 30-year loan, so it doesn't necessarily hurt you as much as others, where I hear, yes, you can skip 3 months, or yes, you can skip 6 months. But at the end of that time period, either A, they have to make the entire 3-month payment at that time, which if you're making a $1,500 a month house payment, month 4, you have to make a $6,000 house payment because you have that current month plus 3.
Right.
If they're deferring it for 6 months, what I see mostly is they take those 6 months payments, divide it by 12, and then add that amount to your normal regular monthly payment over the next 12 months. So that could be $200, $300, $500, depending on where your mortgage payment is. So you also have to understand that you're going to need to afford what's coming at the end of that.
And so that's typically like a loan modification is what most people will recognize that as, which could potentially lock you into that home for at least that repayment period, right? So if they're
Correct.
Modifying for a 12-month repayment, you're not going to be able to move out of that home unless you obviously can pay it all off. with the equity. So definitely something to consider. Now, when it comes to refining your home, obviously some things are still going to come into play. We obviously talk about how quick a refi can happen, but you will still need to have decent credit score. You'll still have to be employed. If you're furloughed or laid off, a refi, you may have missed the opportunity with that, correct?
Correct. I mean, the good part about a refinance is a lot of people right now, they may not need 3 months or 6 months payments. This hasn't been going on for a long time. We have to realize that. They only need a month or two. And guess what? On a refinance, you can skip 2 mortgage payments to help yourself out. So not only do you get a lower payment, but then maybe skipping 2 might get you past all of this that's going on today.
Mm-hmm. Great. So, talking about interest rates a little bit more, what are your thoughts? I mean, we've been, just in the last 2 months, we've seen refis and new mortgages ranging from, what's the low end you've seen? Going
I've
back
seen them
to
down
say,
at,
January.
for a very short time, we saw them down at like a 2.8.
Mm-hmm.
And then everybody realized what was going on and immediately raised those up to like 3.25. Realizing that people are going to have a difficulty making payments right now. And in the big scheme of things, the reason these guys are raising rates back up a little bit, because where the bond market is and the financial market, sure, we should have rates in the 2s. Everybody knows that to be true. But if 1 million people have to not make their payment for a month, 2, or 3 months, it doesn't mean that the mortgage company doesn't have to make those interest payments.
Right.
What happens is these mortgage companies are making their payment to the servicer for $25–50 million because there's 1 million people doing it. And you times that by, I don't know, 40 or 50 banks out there that are taking the payments in. All of a sudden you have, $250 to $300 million in forbearance payments that still have to be made, maybe not by the consumer, but by the mortgage company themselves. So that is direct cash out of their bank account, out of their pocket to make those payments. And that's why they have to keep the rates kind of in the middle. They need to make up for that.
And so just so people understand, when you say the mortgage companies have to keep making those payments, they're making the payments to their investors, right? So some people call them warehouses. And so if they're making those payments, that leaves them kind of cash poor to write new loans, right? They can't write new loans if they don't have the money to know they're going to be able to make those payments to the investors as well.
Correct. And a real good example of that is, even though you skip this month's payment, it doesn't mean that Clark County doesn't want their taxes.
Right.
That's the easiest example to make, right?
Definitely. Yeah. I mean, I think anyone will understand that the buck's got to stop somewhere. Somebody's on the hook for the money.
Always.
And so seeing a spike in interest rates after the record number of refi applications we saw back, I think that was February, just in a short period when the rates dropped below 3. I know you were going crazy with refis, as apparently was the rest of the country. So then all of a sudden the rates went up to try and ease that burden and slow things down. So let's talk about short term. What do you foresee in the mortgage world, really, over the next 30, 60 days? What's going on? What are you looking for to inform your clients about?
Really is just be patient with the mortgage process at this point, because really it's become a longer process and more work per loan. Just as the easiest example, because of the overinflux in refinances, it's pretty much quadrupled the normal origination business. So turn times to get an approval might be a week instead of 2 or 3 days. To get that appraisal done might take 10 days to 2 weeks instead of 4 or 5 days. To get conditions signed off and get loan docs, things like that, all of the the times that it takes to do that stuff normally, only a couple of days, but today it might take a week per section of that process. So writing 45-day escrows is really helpful, being patient in the process, and then also understanding, because of what's going on, we have to verify employment like 3 times before we can close on the loan. I mean, we get a loan approval, you have to verify that they're still working. Even if the place of business may be closed, they still have to have the ability to work. So
Right.
they can't just be getting paid. And that's a very big misconception. I'm still getting paid, but that doesn't mean your place of business is open. So we have to verify those types of employment at approval, when they sign loan docs, and then the day we're closing again, we have to do it. So they're really hitting that home because obviously they don't want to give mortgages out to people that don't have a job.
Yeah, and obviously you and I know this. We have a transaction that just came across this challenge a couple weeks ago. So for the audience, we have a first-time buyer that was on closing week, went to verify employment that last time before we closed the next day, and unfortunately, one of the couple's members didn't have that job. She was let go just the day before. And so, there's situations where you mentioned you have to work a lot harder on your side. We do too. Right, the conversations with the other agents and brokers to the transaction. You hope that they all understand we're in this together with COVID, but at the end of the day, it's business as usual from a legal standpoint, and we still have contracts and timelines that we all have to try and ease those tight timelines and say, okay, things might move at a slower pace. I will say Vegas, compared to agents I talk to around the country, I think we've had it really good in the sense that we considered 30-day close the norm and not an exception. You tell people in New York City that you can close in 30 days and they're blown away because there it's 120 or more days to get a deal done. So we are lucky in that standpoint. So asking for an extra 2 weeks to get a deal done is not unreasonable right now. So
no, not at all. I agree.
Yeah, great. So so let's talk about what's the one tip you can leave our buyers right now, or buyers and sellers, but from a mortgage standpoint, what can our buyers do today if they want to buy this year? It's their goal to buy in 2020, and they've got their employment is not disrupted, or they feel strong about that. What's the next step? Like, what would you advise them right now today?
I mean, they have to get their pre-approval done because that also gives them the opportunity. If they're not buying in the next 30 or 60 days, maybe we talk about how we increase their scores and improve their interest rates. I mean, it's an opportunity for people that are home to get a lot of work done that they probably in most circumstances wouldn't have the time. If they're working a 9-to-5 job, that's the same time that all these credits typically. So, getting extra things done today is going to benefit everybody in a huge way. So if it's that buyer that wants to buy now, I would tell them to buy now, because a lot of the people that couldn't buy over the past 60 days or so still want to when their job comes back. So there's going to be a huge influx, in my opinion, of buyers that come in over the next 90, 3, 4, 5, 6 months. They're all still going to want to buy.
Yeah.
So if you have the ability and the good, the credit or whatever the case may be, buy now. And sellers have to know that these are more serious buyers, or not necessarily more serious, but people that have stable jobs and things like that, that you don't quite have to worry about. So for the buyers and the sellers, now is a really good time, because it's going to get, in my opinion, super busy in the third quarter of the year.
Yeah, that's what we're expecting for sure. I mean, that's in line with what my my buyer pipeline looks like. I think the conversations right now are not changing from I want to buy this year to maybe next year. I think that's what we saw in 2018, early 2019. But now people are saying, no, my affairs are in order. I still want to buy. Our affairs are in order, except I have a temporary loss of employment. But as soon as they bring me back, we're ready to get back in the buying game. And to that point, one of our transactions, what are you hearing from underwriting when somebody goes back to work? How quickly are they going to be able to get into that contract and close on a deal? Do they have to, work for 2 weeks, get a pay stub, or is it, a verbal verification? How easy or challenging will that be?
It all depends on the job. So if we can do a verbal verification of employment and they tell us that they're back full-time, 40 hours a week, we can do the loan next day.
Okay.
Now, what I am hearing is some companies out there are going to kind of bring people in slowly. So they're going to come back 30 hours or 35 hours. And based on that, we couldn't qualify them on their 40-hour qualification that we did before. So either A, they'll have to see if they qualify with the shortened amount of hours, or wait until their company gets them back to full time.
Okay, great. That's fair enough. Okay, great. Well, listen, I appreciate your time. And for our audience, guys, we're going to do this. We're going to try to do it every week. I know Chris is busy, but things are changing that fast, and we want to make sure you're up to date. So if you guys have specific questions about your mortgage, your existing mortgage, if you're thinking about forbearance and you just want to run it by somebody, reach out to me, reach out to Chris. We're here to help you guys. If you do think that buying is on the horizon in 2020, again, reach out to us. We're here to help you. Non-commitment, we just want to make sure you've got the right advice. So we will be back next week. We'll give you another update what's going on with Chris in the mortgage industry. And again, if you have specific questions, shoot us a message. I'm getting tongue-tied now. It's the end of the day. But shoot us a message or a phone call, and we're here to help you guys out. So thanks for watching. And Chris, again, thanks for joining me on this interview.
Yep, appreciate everything you do, Mark.
Okay, take care, guys. Have a good one.